Welcome to Markets Now. I'm Michelle Ruff with Shawn Hackett with Hackett Financial Advisors. We have a lot of grain on the livestock board this morning. The grain market is mixed. Soybeans back to the plus side, but we're a little lower in corn and the wheat futures. And Shawn, really, let's talk a little bit about what's been going on this week. It feels like the grain markets are kind of in transition where maybe the funds have covered enough shorts and now are just kind of taking a breather, or am I reading that wrong?
Yeah, I mean, if you look at the COT report from last week and how much buying I think they did this week, I think we're going to find that they've pretty much covered the majority of their short positions in the grains. And usually that's a place for them to take a step back and look at what's happening and take some time to see if they want to actually go net long, which is a much different position than covering shorts. I think ultimately they will do that. I think there's enough weather worries with the drought in Brazil, delayed planting in soybeans, and Russia-Ukraine drought that they'll find the reasons to do it with geopolitics as well. But probably for right now, with some rains coming into the Midwest, coming into Brazil, this would be a time for them to take a step back, take a pause, and let harvest in the U.S., continue forward for a little while longer.
So in your mind, Shawn, what is the catalyst or what do the funds need here maybe to start going long in this market?
I think the first thing is that they want to see that the U.S. crop's not going to get dramatically bigger than it already is. I think they're going to get that signal next week. The other thing I'm pretty certain they want to see is that the drought in Brazil and the drought in Russia-Ukraine, I think they want to see those droughts carry forward a little longer to show that there's permanent, irreversible damage to two key bread baskets in the world, and that future production and future supply are going to continue to be under pressure, which will lead to significant and steady, strong U.S. exports of grains. I think those are the signals they want to see to make that decision to go net long these markets, which they haven't been for quite some time.
So it's not just all about technical signals, because we have seen some really good technical signals getting above key moving averages to spur the funds, right?
Well, no doubt technical signals are important. There's a lot of funds that only act on those technical signals. We've gotten some of those that are indicating the market is starting to turn up. But to follow through, one thing is to get a technical buy signal. The next thing is to follow through on those signals. I think we need the fundamentals to support the technical move here.
You bet. So the fact that we have corn and wheat down this morning, soybeans are still under the weekly highs. We've really hit some technical objectives here, some resistance on the charts now that is maybe causing a little bit of profit taking, or what?
Yeah, absolutely. I mean, the 430 to 450 area on December corn, the 1050 to 1075 area November soybeans, those are certainly important underlying initial resistance areas that the market would make sense for the market to have a pause and pull back and take a rest, especially with some rainfall coming into Brazil. The market's going to want to see how that all really plays out, the distribution of those rains. It's a perfect time to take a pause. And of course, the harvest in the U.S. with the dry weather we have is really rapidly going, and some farmers still have to sell.
So you're probably getting some hedge selling is what you're saying, or some farmer selling, and that's going to kind of continue here to overwhelm the market for the next few weeks, isn't it?
Absolutely, and I think that's why it's 2 steps forward, 1 step back. We are seeing cash bases widening out in a lot of places on this rally as farmers are selling, the cash, and so we have to get that through that process in order to really, in my opinion, have a more protracted move to the upside. So the next couple of weeks, unless there's some external shock, I think it's going to be sort of a pause period for the market to establish a higher base.
All right, one external shock that we've had here is this geopolitical situation with the Middle East war. We put in a little war premium into the wheat market this week. Do we have enough in at this point?
I don't think we have enough in it. I think the situation, especially as the closer we get to the U.S. elections, I think it's going to continue to escalate. Hard to predict exactly what day, what moment, what soundbite's going to do it, but I don't believe $6 wheat on the SRW is enough premium to factor in all the risks that I see going forward, at least into and through the U.S. election. I think ultimately we'll have to put more on.
And does wheat have enough weather premium in it with what's going on over in the Black Sea with dryness there, and Australia has had some frost and whatnot?
Yeah, I don't think we've truly assessed correctly, especially the Russia-Ukraine drought. I mean, it is one of the top two worst droughts during the planting season of winter wheat, really since the 1970s. And when we look at that, and we look at how many acres will get abandoned, how many acres won't get planted, and the acres that did get planted, the terrible stands going into dormancy, the prospect for the crop that's going to be harvested next year looks really, really bleak. And remember, we were already down 15% this year over last. This would be considerably worse, and they are the dominant price setter and exporter of wheat in the world. I don't think we factored all that in. That's still ahead for us to do.
The other thing we have coming up is the WASDE report next Friday. And so what's your thoughts? Is the market trading or leaning one way or another in terms of corn yields or soybean yields at this point?
I think because we've had two straight quarterly grain stocks reports that have showed lower supplies than the market thought, I think the market's getting comfortable that we've already traded the largest balance sheet ending stocks that we're going to trade. And I think the market's getting comfortable that the crop yields are not going to see levels dramatically higher from where they're at. My best guess is that corn, is about right. Maybe it could go up a little bit, but not much. I actually think the soybean yields are a bit heavy, meaning I think the USDA's overestimated the soybean yields. I'm hearing a lot of, it's good, but not as good as I thought kind of yields coming to me from customers I trust. And so I think they're going to have to knock that yield down some. Wouldn't surprise me if we saw a little bit of a knockdown in the next two reports in soybean yields, tightening up the balance sheet, making it less burdensome.
And we did have the jobs report out this morning. It was better than expected. That shot the dollar up here. And so is that having an impact on the ags at all this morning, you think?
Anytime that you surge the dollar at all, it's always going to have somewhat of a net negative effect on the day that it happens. Obviously, we have seen terrible adjustments in these jobs numbers 1 to 2 to 3 months later, showing that the front-loaded jobs reports are not to be trusted. So I would really, really take today's report with a grain of salt. History says we shouldn't take it too seriously, but on the margin, a strong dollar today, always on the margin, puts a little pressure.
Although it does make the economy look like we're doing better. So is that maybe helping to support the meat sector today, the cattle market at all? Or do you think that's maybe some of this China stimulus?
I think it's a combination of both. I think obviously the bazooka China stimulus we saw last week, this 30% surge in Chinese stocks, which has been a very negative story up until last week, absolutely helps the psychology of the livestock sector. And on the margin, a stronger consumer perceptually, means better demand than we thought we might have. And those are two positive trends that the funds can get their hands around to want them to go long or more long the livestock market. So on the margin, both of those are helping right now.
All right. Thanks so much for joining us. Shawn Hackett with Hackett Financial Advisors. That is Markets Now.